Hi friends, this is Chitra. Welcome to my YouTube channel. How are you all? Hope you are all doing good. So today we are going to learn what is called chart patterns and what are the different types of chart patterns and how can we trade using the chart patterns. So basically, what is the meaning of chart patterns? Chart pattern is a shape within the price chart that help us to suggest what the price is going to do next based on the past price action analysis. So chart pattern is the basis of the technical analysis. So every trader should know how to trade with the different chart patterns. So in the market we have n number of, that is there are lots of chart patterns, right? So today we are going to learn what is called double top, double bottom, triple top and triple bottom. So we should analyze if the double top or double top bottom is formed, whether we have to enter into the long trade or the short trade. So if the two tops is formed or if the double top or triple bottom is formed, how can we enter into the long or the short trade? So we can look into the video now. In the financial market, prices are determined by supply and demand forces, that is the support and the resistance zone. We can understand whether the buyers or the sellers winning in the market. Okay. Chart patterns provide a visual representation of the battle between the buyers and sellers. So, you see if the market is trending higher, lower or moving in the sideways. Sideways means market is in the consolidation phase. Knowing this can help you make your buy and sell decision accordingly. There are tons of chart patterns. Most can be divided into two broad categories. What are they? They are the reversal and continuation patterns. Reversal patterns indicate a trend change, whereas the continuation pattern indicate the price trend will continue after a brief consolidation. Now we can see what are the different chart patterns. Okay, first is horizontal congestion. In that we have double top, triple top, double bottom, triple bottom, rectangles. Okay, under the triangles categories, we are having the different patterns. Those are symmetrical triangles, ascending triangles, descending triangles and wedges. What is the next pattern? That is the other categories. That is the head and shoulders and cup and handle. We can see what is called double top. A double top is a bearish technical reversal pattern. A double top is a bearish signal also. Investors can short trade after the break or play small trades, as double tops may have limited profit potential. The stock price will form a peak and then retrace back to a level of the support. Okay. Here the stock price will form the peak. This peak is called the resistance, and after that retrace back to the level of the support. So this is the support level. It will then form a peak once more before reversing back from the prevailing trend line. Okay. So again from the support, it again went to the resistance level. Okay. So it looks like an M pattern. So double top is also called as an M pattern. So this is the example of the double top. So this is the first top and this is the second. So it looks like an M pattern. So the price is reversing from the support zone. Okay, once the price touched the support zone, it will go and touch the resistance. And again, we can see the bounce till the support zone. And after that, once again, the price is going back to the resistance line. So we can see that the price is trying to touch the resistance zone twice, but not able to go above the resistance line. Okay, and again, we can see that there is a decline from the price, that there is a rejection in the resistance zone. So the price again came back to the support zone. So this is how the double top pattern is formed. Okay, and after this support line got broken, we can enter into the short trade. Okay, and we can see that the price is falling down, and after that we can see that there is a pullback to the support line again. So here is a place we can enter into the P trade, that is the short trade. Okay, after that again we can see that there is a fall in the price. What do you mean by double bottom? A double bottom is a bullish technical reversal pattern. Double bottom is a bullish signal that is totally opposite to the double top. The stock price will form a peak and then retrace back to the level of the resistance. Here we can see that the price is at the resistance level, and we can see that there is a decline from the resistance level and from the peak, and then again retrace back to the level of the resistance. It will then again form a peak once more before reversing back from the prevailing trend. It looks like a W pattern. So double bottom is also called as W pattern. So this is the example of the double bottom. Okay. So here is the first bottom and this is the second bottom and this is the support line. Okay. So the price is falling down till the support line. Again, we can see that there is a bounce of the price from support to the resistance level. Okay. Again, not able to break the high. Again, we can see that there is a decline in the price and again back to the support line. Okay, so this will look like a W pattern, and if the price is breaking the resistance level, we can see that that is a breakout. Okay, and we will always enter into the trade at the pullback from the resistance level. If the price is again breaking the resistance zone, we can enter into the long trade. So this is called double bottom. This is how we have to enter into the double bottom. That is called the bullish trade, long trade. Okay. Now we can see how can we see the double bottom. Okay, now we'll remove all this. Okay, so here we have same example in the same chart, that is for the double bottom. Okay, so this is first bottom, this is the second. Okay, so when we'll be entering into the long trade, we'll be entering into the long trade once this high is taken away, that is above this resistance level, we can enter into the long trade. So this is the support level. Okay, as I already explained to you, this is the support level. So here we have two bottoms. This is a support 1 and support 2, that is bottom 1 and bottom 2. So the buyers are strong here and not able to break the low. So we can enter into the long trade above this. Entry and long trade we can enter here. So this is called the double bottom. Okay, so our entry point is here, so we can enter into the long trade above this candle. Okay, the third pattern is the triple top. A triple top chart pattern is a bearish reversal chart pattern that is formed after an uptrend. Okay, this pattern is formed with 3 peaks. Okay, here this is a first, second and third. This is a 3 peaks above a support level or the neckline. The first peak is formed after a strong uptrend and then retrace back to the neckline. The formation of this pattern is completed when the prices move back to the neckline after forming the third peak. So we'll have 3 peaks in the triple top. These are the 3 tops. When the prices break through the neckline or the support level after forming 3 peaks, then the bearish trend reversal is confirmed. Okay, here the bearish reversal pattern is confirmed when it breaks the support line. This is the picture of the triple top. This is the resistance line and this is the support line. Okay, price is going from the support line, that is from here the price is trying to reach the resistance level and price is trying to break the resistance level, but we got the rejection from the resistance zone, that is a decline in the price. Okay, buyers are in control as the price makes a higher high followed by a pullback. The first sign, okay, of selling pressure appears as the price failed to break out the prior high. So here again the price is trying to break the prior high. At this point, market makes a pullback and forms the consolidation. So this is called the consolidation phase. Again, market attempts to break out the higher and fails again. So this is the third time market is trying to break this high and this high, again fail. The 3 spikes are visible after 3 failed attempts to break out. So again we can see that there are 3 spikes are formed, that is called 3 tops, that is called triple top. The price breaks below the low of the consolidation. So after the consolidation, price breaks below the low of the consolidation, that is price is breaking the support line. Okay, and the triple top chart pattern is completed. Like this, the triple top chart pattern is formed and this is the bearish signal. So here the price is breaking the support zone and again after that a pullback is formed and here we can enter for the short trade. Now we can see an example for triple top. Okay, so this is Nifty 15 minutes time frame chart. So this is triple top. Okay, so now we can see how the triple top is formed. So this is the first top, okay, second, third. So here we can see that there are 3 tops. This is called triple top. This is the horizontal ray we are putting and this is the resistance level. Okay, and this is the support zone. Okay, so one can enter into the short trade once this support is taken away. Okay, below this one can enter into the PE trade. So where can we enter? Here. This is the entry level. Okay. So below this, one can enter into the short trade. Okay. So once we got the triple top, means there is a huge resistance level is there and it is not able to break that resistance level. Means no, sellers are very strong. That's why price is going from resistance to the support. We are getting rejection at the resistance zone. Okay, so one can enter into the short trade below this. So this is how we have to enter into the triple top pattern. What is called triple bottom? A triple bottom chart pattern is a bullish reversal pattern that is formed after the downtrend. This pattern is formed with the 3 peaks. We can see there are 3 peaks here, that is at the support level, below the resistance level, that is called the neckline, and this 3 peaks is below the resistance level. The first peak is formed after a strong downtrend and then retrace back to the neckline. The formation of this pattern is completed when the price move back to the neckline and after forming the third peak. So how this pattern will get completed means after forming the 3 peaks, the price will retrace back to the resistance level. Okay. When the price break through the neckline or the resistance level after forming 3 peaks, then the bullish trend is confirmed. So one can enter into the long trade above this resistance level after forming the 3 peaks, that is at the support level. Means no, buyers are strong here and not able to break the support level, not able to break the price below this, and we got the breakout at the resistance level. So one can enter into the long trade above this resistance level. Now this is the triple bottom. Here we can see this is the support line and this is the resistance line. And here we can see that there are 3 supports, support 1, 2 and 3. Means price is falling from the resistance level and touching the support zone, and price is trying to break this level. Okay, but buyers are very strong at this particular level. Okay, and we can see that there are 3 times price is trying to break this particular support zone. So this is called as triple bottom. Okay. First, one should see the market phase, whether it is uptrend or in the downtrend. As the triple bottom is formed at the end of the downtrend. Okay, the price trend should be the downtrend here. Okay, traders should only enter into the long position whenever the prices break this resistance zone, and after this breakout we can see that there is a pullback in the price, and after that we can enter into the long trade. So this is how we have to enter into the long trade when we are getting the triple bottom in any charts or in any stocks. So these types of pattern we can identify in any time frame. So this is an example for the triple bottom. Triple bottom, why the triple bottom is formed? Means at the support zone, because price is not able to break the support zone. Means what? The buyers are very strong here. So once this resistance level is taken away, we can enter into the long trade. So we can enter long here because this is the first support, this is the second and third. So we got the triple bottom here. So triple bottom pattern if you are getting, that is an entry for the long trade. Means the trend is bullish. So one can enter into the long trade above this green candle. We can enter long here. This is my Telegram channel. Here I will share my views on Nifty and Bank Nifty based on technical analysis. Post market, I will share the key zones for the next day trading. This is a free Telegram channel. In the live market, I will be sharing the key zones for Nifty and Bank Nifty, which will help you in our trading. Traders can make use of these levels to make the better decisions. Hope this video is useful to you. Please don't forget to like, share and subscribe. Click the bell icon too for my upcoming video notifications. Thank you for watching.